I think we need to play a little Devo tonight because this really is an earnings whip around. This is the busiest week of earnings. We are in full swing of it. 130 plus companies reporting, a bunch of big names tonight. We talked about Apple already. AMD, eBay, Starbucks, they also rolled out their numbers. And by the way, all three of them are down after hours. The entire CNBC earnings squad is with us to break down these big numbers. We've got Kate Rogers on Starbucks, Kate Rooney on eBay. But let's kick things off with Frank Holland, and he's got more on AMD. Frank.
Hey there, Brian. Shares of AMD falling right around 4% after reporting record quarterly revenues that beat estimates and a beat on the bottom line. However, guidance, it was a little mixed. For Q1, slightly below estimates. For the full year, slightly above. For a company with some high expectations and shares that improved almost 150% last year, Kevin Rottinghouse of Edgewater found the guidance and the performance of the gaming business both disappointing. He said the gaming console business was a drag. The guidance for Q1 seemed light. The gross margin guidance was better. With a mix of new products and share gains, the hope would have been better margin guidance for all of 2020. Matthew Bryson of Wedbush, however, saw more upside, but he was looking forward to the call that starts shortly. He said, no surprises at all. How the stock trades will depend on what they say about their EPYC server processors. They are a structural share gainer versus Intel, and this result doesn't change that opinion at all. And we will get more insight on AMD and likely its gaming business on the call, which again starts at 5:30. Remember, the company will provide the chips for the new Xbox and PlayStation consoles being released this holiday season, so kind of a big deal for investors. Also, CEO Lisa Su, she joins Squawk on the Street at 9 a.m. tomorrow for an exclusive interview. Brian, back over to you.
All right, Frank Holland, thank you very much. And a big interview tomorrow. Squawk on the Street. Let's trade AMD. I'm looking at this beautiful piece of paper with the blue highlighter on there. You know what I circled here, Tim? That AMD was a $2 stock in 2015. That wasn't that long ago. We're seeing a market that is reacting. It's down 4% on not terrible guidance. Do you think the gains have been made in AMD?
Well, I mean, this is a stock that's up 90% since October 3rd. And it's a stock that we all know they're taking market share from Intel. So I don't think there's any big revelation. If you listen to Cowen, who certainly may be one of the most bullish, they just upgraded from $47 to $60 a share. They're saying it's two things. First of all, their PC business, their 7 nanometer is moving very quickly to take on Intel, but that also the long-term addressable market for these guys is something that's giving them the ability to outperform. But I think you have to take a breath here. This valuation, why wouldn't you want Intel at this level?
Right. I think there's just the run that it's had. And Intel, we talked about them, you're talking about AMD gaining share, but Intel fighting back, right? That was a really, really impressive quarter from Intel. So, and the valuation, obviously, for Intel is much different than it is for AMD. It's just run up so far. It's not like anything's so bad about this quarter.
I tend to agree. This is a great long-term chart, but tactically it's rich. It was a $40 stock a month ago. It's a $51 stock today. You can cut it in half without a problem. And I think that's the issue with some of these semis. The moves over the last 20 or 30 days, you're talking about stocks that are up 20 or 30%. You can cut that in half over the next month or two, and it'll be painful.
Okay. Let's now move on to eBay. That stock trading down over 5%. It's the biggest decliner of the major names are after hours. Let's find out what has bothered investors in the quarter. Getting out of Kate Rooney with more on eBay. Kate.
That's right. Hey, Brian. eBay shares down more than 5% after a sales decline in the fourth quarter and a miss on Q1 guidance. Results were better than analysts had expected, with a beat by about 5 cents on earnings and beating by a hair on revenue. Company also announcing a $5 billion buyback and announced a 2-cent dividend increase. But despite that, gross merchant volume, closely followed metric in e-commerce, also came up short. That was below estimates at $23.3 billion. One factor for that miss, the CEO just mentioned on the call, implementation of the internet sales tax by the U.S. in 2019. That Q1 revenue guidance also coming in below expectations and hitting the stock. You see it's underperformed the S&P in the past 3 months or so, and throughout 2019 with some big swings, down more than 5% now. Back to you, Brian.
All right, Kate Rooney. Kate, thank you very much. Karen, your take.
Yeah, so last year I thought it was interesting when Elliott came in and they really wanted to shake things up and they got on the board and they were able to do some of that, including they got eBay to sell StubHub, and that was nice. However, the main driver here is the core business. And while the stock's not cheap, with the core business under threat the way it is, it shouldn't be expensive. It should be cheap. I wouldn't own it here. I don't
You would
know.
not. Well, it's been a stock again. You go to the charts, Chris. That's your world. That hasn't made investors any money in 2.5 years. Stocks at the same in this market. It's at the same price it was 2.5 years.
We've had everything make a new high everywhere around the world
Except eBay.
over the last 6 months, except this one. The stock's been in a bear market since February of 18 when it peaked. I like 27 on the downside. It's just short here. It's weakening. It's below the 200-day. That's not what we want to own here.
Well, what the chart tells you is that also a quarter ago, so if the chart tells you that this thing really fell apart on their third quarter and their third quarter or fourth quarter guide, where they said we're talking low single digits in terms of revenue and EPS for a company that's certainly not trading on multiple. So the GMV in their core marketplace business is that which I think has proved me right now, and they haven't proved anything.
Yeah, Guy Adami, Wells Fargo, the analyst, recently calling eBay, quote, a melting ice cube.
A melting ice cube.
I wouldn't imagine that's a very good reference.
Don't all ice cubes melt at some point by definition? It would stand to reason. I mean, it's an interesting analogy. Listen,
correct.
So let me put it this way.
And by the way, not an iceberg. At one point they're an iceberg. They're now just a cube.
Now just a cube.
That's pretty disappointing.
Then you're sublime and it's all gone. I mean,
You just crossed music references, by the way. You went from iceberg to ice cube to sublime.
Sublime.
How about vanilla ice?
How about vanilla ice? How about $34 being the line in the sand, which Chris Verrone just mentioned? That was the December low. If it breaks there, it trades next than last year's December low, which was 27. Despite the fact that if you look in terms of price to earnings for next year, it's not ridiculously expensive. They just can't get out of their own way.
Brian, real quick, would you rather iced tea or ice cube? Forget it, vanilla ice. Iced tea or ice cube? Where do you go?
I would have to go. I'd go with the cube.
Really? Iced tea's got a
No,
lot.
I'm
Ice-T did have that punk. I believe it was called Body Count. It was like a punk side project. Anyway,
That's why it's softball.
all right, let's round out our earnings trifecta. By the way, Ice-T's a big CNBC viewer. I know he lives right down the street. That stock falling after reporting results. The company also making some fresh comments about the coronavirus. Let's get now to that. Kate Rogers back at CNBC HQ. Kate, I know this is a big deal for China. It's a big deal for Starbucks as well.
It is, Brian. No one asked me, but I'm in the iced tea corner. But Starbucks out with a strong Q1 for 2020. Revenues coming in line, EPS a beat, comps a beat across the board. U.S. same-store sales grew by 5%, comps in China up 3%, as strength really continues to grow in both of those all-important markets. Now, the holiday season was one of its strongest in history. And while Starbucks maintained its guidance for full year 2020 thus far, the company also warned that the coronavirus may impact its results moving forward. The company's now closed more than half of its stores in China and says that while this is expected to be temporary, the financial impact can't be reasonably estimated at this time, and that disruption to business and reduced customer traffic are expected to, quote, materially affect its international segment and consolidated results for the second quarter and full year 2020. Starbucks added that guidance will be updated once it can reasonably measure the impact of this virus. Now take a listen to CEO Kevin Johnson on the call.
Our immediate focus is on two key priorities in China. First, caring for the health and well-being of our partners and customers in our stores. Second, playing a constructive role in supporting local health officials and government leaders as they work to contain the coronavirus. That said, we remain optimistic and committed to the long-term growth potential in China, a market we have been in for more than 20 years.
And you won't want to miss Starbucks CEO Kevin Johnson live tomorrow morning for a first on CNBC interview on Squawk on the Street at 9:30 in the morning. Once again, China very important to them. They call it their second home market. So we'll hear a lot more about that tomorrow, Brian. Back over to you.
Yeah, huge market, and yet another huge interview on CNBC tomorrow. Kate Rogers, thank you very much. So, Tim Seymour, can you own a stock where they effectively said, we don't know what's going to happen in our second largest market, and for how long?
Look, I understand how dangerous that can sound, but the answer is yes. And we're not talking about a secular problem with the company. We're not talking about a structural problem with the company. We're talking about a short-term cyclical, which is, again, devastating right now. But there's nothing in their business. When I hear that their mobile grew 40% in China, actually their loyalty business grew 40%. It continues to grow to 18.9 million on their rewards in the U.S. This is actually re-rating along kind of at least a tech multiple. Hear me out, in terms of actually their ability to get a higher ticket sale and to be more efficient. That's why this company is actually re-rating. I love it. I mean, 6% U.S., their core market, is doing nothing but moving higher than expectations. So I stay long.
But, Tim, for a stock that also went 50 to 100 over the last year. I think that has to give us some pause in this type of a market where those big movers are getting hit. The structural story is intact, but nothing prevents it from going 94 back to 85. And I think it's a better opportunity there. Also, keep in mind, they just talked about best holiday sales. Well, why is the stock not making a new high? Things should make new highs.
Isn't it sitting right on its 50-day moving average or close to it?
I'm just not convinced that's going to hold here. I think there's downside risk.
So if it doesn't hold,
$5 to $7 lower, it's a better, more timely opportunity there.
Okay, so watch that 50-day moving average. If it breaks through it, then Chris says you got another 5 to 7. But Tim says China's bad, but you can own the stock.